People are recognizing that fiat currency is at the end of its useful life, and we're going to move on to something else. The question becomes, is it going to be gold or is it going to be Bitcoin?
You're the only one who supports gold that I've actually spoken to or listened to, but also supports Bitcoin. And you believe in what both represent.
We're both on the same side of the fight. We're fighting against fiat currency. We're getting rid of the old Central Bank of England model, and we're moving to something new. We're moving to digital currency. Bitcoin is a very useful stepping stone in educating people that there's something better out there than fiat currency.
Before we get started, this isn't financial advice. Know your risk tolerance, do your own due diligence, and speak to a financial advisor. So, welcome back to another pod. Today is a special day for a few reasons. Number one, gold just hit $3,000 an ounce, a price it's never seen before. Financial system is at a breaking point, at least seemingly. US stock markets are down on the year, and the world is waking up to, I think, the real nature of what money is. But few understand money like my guest today. And for roughly 5 decades, James Turk has been at the center of international banking, finance, and precious metals. He started at Chase Manhattan Bank, worked in the Middle East, managing billions in commodities for the Abu Dhabi Investment Authority, and later co-founded GoldMoney, a global leader in precious metals custody and the world's largest precious metals network. Now, James has spent his life studying monetary history, and if you think gold's recent rally is just another bull run, I'm sure he'll make you reconsider everything you thought you knew about currency, debt, and what might be coming next. So, James, welcome to the pod.
Thanks, Aaron. It's great to be with you.
So I'm a big fan of yours. I love your commentary. I think you can break particularly monetary policy and the framework and precious metals and how things all tie together. I think you break it down better than anybody. I think you're obviously a true student of the game with global perspective, real global perspective, because you worked around the world. I don't think anyone can match your knowledge when it comes to the monetary system. So before we dive in, I always wonder, is there a moment, like what drew you to the world of precious metals and to become an expert in our monetary system? Was there a moment in your childhood or what was it?
I guess it's really going back to my parents and my grandparents. My father was born in Austria, and he and my grandparents decided to emigrate after the Austrian hyperinflation. And from him and my mother, who is Slovenian, I've learned a lot about what happened in the Austrian hyperinflation and what really is money. It's sort of stuck with me, how to manage your finances and things like that, because they lived and worked through the Great Depression, and they got through it okay. And I had a very happy, childhood of a middle-class family growing up in America. But then I went to university, and everything that I learned from my parents was the opposite of what I was taught in terms of the basic monetary principles at the university. And I realized that at the time, gold was $35 an ounce. And as it started climbing up to $50 an ounce, this is back in the late 1960s, early 1970s, I realized that either everything I learned about gold from my parents was wrong, or what I learned at the university was wrong. And I found out shortly thereafter, after re-educating myself by digging into the Austrian School of Economics, that all the Keynesian nonsense that I learned at school was totally wrong. And what I learned as a kid, the common sense intuitive reasoning as to what money is and what money isn't, was correct. And so ever since then, I've been on a quest that, first of all, understand what's happening in terms of the changes that were being made in the monetary system, and then protecting myself and my family. Subsequently, with my writing and, of course, founding GoldMoney, trying to provide others the information and experience that I've learned over the years as to what really is money, which of course is a tangible asset called gold and silver.
Was it your father that experienced the hyperinflation in Austria, or?
It was really the grandparents.
So what was the family lesson from all of that? What passed down from your grandfather to your father, I'm sure? What did he pass down to you, having experienced obviously hyperinflation?
Gold and silver preserve purchasing power over long periods of time, and paper does not. You want money that preserves purchasing power over time in order to protect your wealth. And that's really a very simple but very key ingredient. The question is why does gold and silver do that? And this is something that I developed with what I call the theory of natural money. Milton Friedman has this principle called the K% rule. And he says that the supply and demand of money should grow at approximately the same rate. And over time, the money will preserve purchasing power. He doesn't relate it to gold, which is what I actually do. And I've actually traced the history of gold and the supply of gold, which is all of the gold that's been mined throughout history. If you put it in a cube, it would slide under the arches of the Eiffel Tower. There's something like 50 times more steel poured every day than there has been gold mined throughout the world, throughout history. This above-ground stock of gold grows consistently year after year by about 1 3/4 per annum, slightly more, slightly less, which is approximately the same rate as the number of people in the world, their rate of growth. So you have this consistency between the above-ground stock of money, gold, and the world population growing approximately the same, just like Milton Friedman postulated you need to have a stable money. It's sad that he never really saw it with regard to gold, but that's why gold preserves purchasing power over long periods of time. An ounce of gold buys the same amount of crude oil it did 70 years ago, or same amount of energy, if you want to put it that way. They say that an ounce of gold still buys a man's suit, whereas in Roman times it bought a toga for a senator. Why does it do that? Because gold is natural money. You have to remember that gold is accumulated. It's not consumed. It doesn't disappear. It's the only thing in this known universe that's eternal. You can't destroy it.
That's actually fascinating. I've never heard the explanation that it grows at the same rate as our population. What does that say about its link to demographics then? Not to get too sidetracked, but this is something that I've been paying a lot of attention to is demographics, particularly in the Western world. So fertility rates have been, for lack of a better word, collapsing for the last 50, 60 years. I mean, in the 1950s and 60s, the average woman, the fertility rate was about 3.5 to 4. Today, it's about 1.4. in much of the Western world. And it's that same pattern we're starting to see happen in Asia and other places around the world as well. Are you concerned about demographics just from an economic standpoint?
Very much so.
Good. So am I. So I'm concerned for a number of reasons, human beings and our civilization and so forth, number one. But just as an investor and someone who works in the markets, I also consider it from an asset value perspective. As it relates to gold and other assets, even if you want to jump into those, what are your biggest concerns about the demographics, and do you see that trend or even being reversible?
Yeah, I'm actually not too concerned about it, although I do follow it very closely and consider it to be very important. I've traced this above-ground stock of gold back to 1492, when the above-ground stock of gold was something you could fit under a kitchen table. And I've traced it from year to year to year, even allowing for those periods like California Gold Rush, the Yukon Gold Rush, the South African RAM discoveries and things like that. You get a short-term blip for maybe 1 or 2 years as a consequence of the newly mined gold coming into existence. But it's relatively small. Instead of growing about 1 3/4% per annum, it might grow 3% for 1 year, and then 2.5% the next year, and then go back to 1.5% per annum in terms of the growth of the above-ground gold stock. And compare that to what happens with fiat currency. Some years it can grow 20% and 15%, as it has after the COVID, when the central banks were really pumping up the supply of paper currency. The interesting thing, of tracing this stock of gold from 1492 to the present, there are periods of time when it actually slowed down to less than 1.5% per annum. And there are other periods of time when it actually grew to maybe 1 3/4% per annum, depending on economic activity. It seems like there's historically a link between economic activity and demographics and the ability to mine gold, which sort of makes sense because, gold is like every other good and service. It's produced with a combination of labor, time, and capital. It's just like every good and service. Gold serves a very special purpose of providing a means of communication between everyone. When you're using gold, which cannot really be created artificially and cannot be destroyed, it's a very harmonious mechanism for operating voluntarily with one another in the free market globally, because the purchasing power of an ounce of gold doesn't change regardless whether you're in Hong Kong, London, Vancouver, or anywhere else. It has the same purchasing power throughout the globe. It's truly unique. And the sad thing is that in the 20th century, we've lost sight of all of these benefits that gold has brought forth and enabled humanity to develop the standard of living that we've developed. Unfortunately, we've got into a variety of modern economic theory that don't have any validity. And as a consequence, few people today understand money, few people today understand gold. But this is the opportunity for everybody. If you want to educate yourself about gold and learn about it and find out why it's at $3,000 and is still undervalued at $3,000 an ounce and has much further to run, in my view, in terms of the purchasing power that it's going to have going forward in the future represents a wonderful opportunity.
Why do you say it's undervalued at $3,000 an ounce? I agree. You probably have a much better answer than my speculative answers would be. Why do you think it's undervalued?
Well, first of all, you have to start the point of view that gold is money. It's not a commodity. It's a tangible asset, like commodities are tangible assets. But gold has unique attributes that all other tangible assets don't. As I said before, gold is eternal. It doesn't deteriorate. It doesn't corrode. It doesn't rust. It can't be destroyed. All other commodities are consumed. Stone houses get consumed and depreciate over time. Gold doesn't depreciate. Gold has an interest rate. Commodities don't have an interest rate. They use this politically correct term of leasing gold instead of the correct term, which is borrowing gold or lending gold. You lease cars. You don't lease gold. You borrow and lend it because it is money. And the interest rate, everybody strives for is basically given to us in the gold price itself. It's approximately 0.5 percentage point per annum for a triple-year credit, to borrow or lend gold. So you have all these attributes that make gold unique. It's a special asset humanity is fortunate to have, and it's called money. The interesting thing, though, Aaron, is, and this sort of gets into philosophy now, why does it maintain purchasing power over long periods of time? There's another element to it. You have to remember that gold is only produced when it's profitable to do so, and technology changes things. Technology makes it more efficient to do things, and that's even true in gold mining. So, for example, 100 years ago, or 120 years ago, you could sink a mine shaft in South Africa, and it would take a certain weight of gold in order to sink that shaft. Today, it takes the same amount of gold to sink a shaft in South Africa, but instead of going down 1,000 feet like they did 100 years ago, they can go down 3 kilometers on the same purchasing power conveyed by that weight of gold, because technology has changed over the last 120 years. It's made things more efficient. The other element of it is gold is dispersed in the Earth's crust in such a way that it becomes harder and harder to find, but technology enables us to find this harder gold. In my 50, 60 years of business career, back in the 1970s, old-timers would walk over parts of Nevada. There was gold there, but there was no way to pull it out. Then in the 1980s, heap leaching was developed, and things that an old-timer thought were dirt are now very, very profitable mines because of the new technology that enabled that mining. But even with the new technology, this above-ground stock of gold grows by about 1.75% per annum, more or less in that range. So the philosophy aspect of it is, how did that come to be? Is it purely by chance, or is it the design of some intelligent being that made it so and enabled humanity to use this mechanism we call gold to interact with one another, to raise everyone's standards of living to the life that we are able to live today, which is obviously much, much better than it was 100 years or so ago, or going even further back. We continue to advance. Humanity continues to advance, and gold is an important element of that.
Fantastic explanation. I'll play devil's advocate here. Could you not argue that over the last 100 years, let's say our quality of life has improved compared to the previous 1,000, a few hundred years ago, we were using precious metal-backed currencies or some sort of metal-backed security. So the world of fiat, has it not helped in some way, shape, or form? Like, how do you associate gold with improving the standard of living in the last 50 years, let's say?
That's a really good question. It's something I've thought a lot about. Humanity structures ourselves with various social contracts. To use an example that I like to speak about, feudalism, when it was first established, it was mutually beneficial to the serf because he got the protection of the lord of the manor. It was beneficial to the lord of the manor because he got the labor of the serf. And then over time, that relationship started getting abused. And after 300 years, it ended, and we moved to a new type of structure. You could look at a similar type of thing with regard to the question you're raising and having money substitutes circulating in commerce, gold-backed paper, things of that nature, or even fiat currency circulating in commerce instead of gold itself. When the Bank of England was formed in 1694, there were certain safeguards that were put in place to protect the monetary system, to protect the use of gold. Bank of England was established in 1694. It became insolvent in 1696 because it had issued too much paper relative to the amount of gold that it had in storage, and silver, I should say, too. So King William, who was on the throne at the time and fighting the 9 Years' War against the Dutch, turned to the brightest mind of the day, Sir Isaac Newton, and said, figure this out. Newton was appointed to the mint, and he did two things. He did the Great Recoinage of 1696. All of the base silver coins were taken out of circulation and replaced with silver coins that had a purchasing power equal to the market value of the silver. And the second thing he did is he put Britain on a gold standard. And by putting Britain on a gold standard, he basically said to the Bank of England, you always have to have at least 40% of your paper currency backed by gold. And that 40% continued throughout history until the Federal Reserve, when it was created in 1913, also had a 40% requirement. So it put a limit on the amount of fractional reserve banking that banks could perform. And by fractional reserve banking, what I mean is that creating purchasing power out of thin air. In other words, you could only go beyond the amount of gold that you had to a certain extent. Now, that debased gold in terms of the purchasing power because you are increasing the quantity of purchasing power relative to the supply of gold. In other words, you had more claims for gold than actually gold was in existing, so there was a debasement of purchasing power. It was a controlled debasement. What happened in the 20th century is the Federal Reserve eventually dropped that 40%. Britain started dropping it in the 19th century when a chap by the name of Palmer was head of the Bank of England in the 1830s. They went down to 30%. And then by the end of the 19th century, when they were fighting the Boer War, they were even down closer to 15% gold backing relative to the amount of currency. And the amount of gold backing relative to the amount of paper substitutes, if you look at from a historical point of view, it sort of marks the peak of the empire. It happened with Britain, and it's also happening with the United States because we have very little gold relative to the amount of dollar obligations that are out there today. You're right that fiat currency served a purpose, but bringing it back to the point I was making, the social contract that we more or less accepted with the Bank of England, it's been abused and it's no longer useful. It's being jettisoned. And I think that's the message that's coming from the technology of, things like Bitcoin. People are recognizing that fiat currency is at the end of its useful life. And we're going to move on to something else, just like humanity has done many times in the past. When something is no longer useful, we jettison it eventually. And we move on to something that's mutually beneficial and more acceptable to raising everyone's standards of living. The question becomes, is it going to be gold or is it going to be Bitcoin? Personally, I think it's going to be gold. There's no reason to think that gold's 5,000-year history of money ends just because of Bitcoin. But I see Bitcoin, since it was $100 a coin, I've been basically bullish on it. My initial skepticism took me a little while to understand what was in it.
James, it's very interesting because I speak with a lot of pro-Bitcoin people and I speak with a lot of gold bugs. The two never meet, right?
That's sad.
It really is. It really is. I mean, the way you break down gold is exceptional. I don't even want to call you a gold bug. I just think you understand money better than virtually anybody I've ever listened to. You're the only one who supports gold that I've actually spoken to or listened to, but also supports Bitcoin. And you believe in what both represent. So can you explain, what do you like about Bitcoin?
We're both on the same side of the fight. We're fighting against fiat currency. We're fighting against the government's presumed right to create purchasing power out of thin air. We have to work to create purchasing power. And we need that purchasing power in order to fulfill our needs and our wants. Governments, on the other hand, they can tax. But they do more than that. They create money out of thin air through fractional reserve banking, through printing paper currency. And that purchasing power works to the detriment of the purchasing power that we're trying to develop and earn through hard work. Bitcoin has a form of discipline. It's a mathematical discipline. Gold has a form of discipline. It's a natural discipline imposed by how the element is dispersed through the Earth's crust and the technology available to mine it profitably. Governments don't have any discipline. They can create as much money as they want. If they want to fight a war, they just create money out of thin air until the money eventually collapses. And I use the term money here in quotes because it's not really money. It's a money substitute circulating in place of money. The interesting thing, though, Aaron, is there's a great struggle going on in terms of how things are going to emerge. Obviously, technology is going to affect it. Personally, I think that gold will become the ultimate money circulating digitally, which is what my patents in the 1990s were all about, digital gold currency.
Yeah.
But time will tell. We can't predict the future. That's the transition. We're getting rid of the old central Bank of England model, and we're moving to something new. We're moving to digital currency. And in that sense, Bitcoin, aside from the fact that, we're both on the same side, gold and Bitcoin, fighting against fiat currency and ability of governments to create purchasing power out of thin air, Bitcoin is a very useful stepping stone in educating people that there's something better out there than fiat currency. And what it comes down to, people have to make a decision. Do you want to use something that protects your purchasing power based on nature or something on math, which is what Bitcoin is based on current technology? You can't break it. The promises of politicians aren't worth much. So that's why we're seeing all of these monetary problems today. We have to put the genie back into the bottle. We have to go back to something that existed up until, say, the mid-19th century, to the 1830s, when Palmer became head of the Bank of England, and they started cheating on Newton's rule that you had to have 40% of your gold in the vault if you're using a money substitute to circulate in place of gold itself. We have to put that genie back in the bottle. We have to go back to gold. And the sooner we do, it'll solve a lot of the problems we face today. Too much debt and all the other issues that are being created.
Why did Newton say 40%? What was that? Just an arbitrary? I doubt it was just a random number. I'm sure he picked it for a reason.
Yeah. Well, it's very Newtonian in the sense that he clearly understood, the flows of purchasing power among nations, and that when you become overvalued or undervalued, the gold will flow in or the gold will flow out. I've never really actually read his scientific analysis of it. I don't think it exists, but I assume it's mathematical. I mean, he was the greatest mind of his day. And the fact that that 40% worked all the way up until 1913, and people believed in it and understood the importance of it until 1913 when the Federal Reserve was created, speaks for his brilliance. Personally, I don't think there should have been even 40%. I think it should have been 100%, because as I was saying before, if you create more currency than there really is purchasing power, you're ultimately debasing the currency. I'm not against borrowing and lending. My view is that in the natural theory of money, as I conceive it, if you want to put your money at risk by lending it to someone, go ahead and do it. You lend someone your gold or you lend someone your silver, then they will spend it and build a factory or do something useful with it. I'm against borrowing and lending for personal consumption. I don't believe in that. The way I learned it, going back to my parents, is you save for what you want, and even if that takes a long time,
that's right.
You save rather than borrowing. The possible exception being a mortgage on a house. A shelter is one of the most important things you need. And in a world of debasing currencies, a mortgage probably makes sense. At least it has for the past 50 years. It may not necessarily continue if governments wise up and start going to a monetary system based on gold. That's sort of my thinking in terms of getting back to the very basis point about the social contract. It was useful to borrow and lend. In my view, there's no room for fractional reserve banking. Murray Rothbard called it a fraud, and I'm entirely in agreement with his thinking on that. Murray Rothbard was perhaps one of the most thoughtful and brilliant economists of the 20th century, along with Mises and Hayek and some of the other stars in the Austrian School of Economics.
Interesting. Sticking on gold for a moment, and this is more cultural. So you've worked around the world, you've traveled around the world. When you compare the mindset of, say, North Americans and probably Britons as well, but when you compare their mindset and their perspective on gold compared to like Asians or Arabs or people who live in South America, do you notice a difference between how, let's call us the Westerners, view gold?
Yeah. Clearly, I lived in Southeast Asia back in the 70s. I lived in the Middle East in the 1980s. Arabs are driven to a great extent by religious principles. And in the Quran, gold is considered to be money. And you don't earn interest. You use your gold to invest in partnership with other people in order to build a factory or whatever it happens to be, in terms of using gold effectively beyond anything for personal consumption. In Asia, back in the 1970s, I learned that the symbol in Chinese for money and currency are basically the same thing. It's basically gold. Gold is the money and gold is the currency, which is sort of an interesting thing, because in the 20th century in the West, we've conflated these two terms. We think money and currency are the same thing, but they're very, very different. Money can basically be anything in the sense that it conveys purchasing power, but gold has proven to be over history the best form of currency when it's circulating as a coin and it as a defined weight, or as a bar as a defined weight. So we have to remember, we have to distinguish between money on the one hand and currency on the other. It's one of the great troubles of the 20th century that people have lost, and it's carried into the 21st century even more so. People don't understand there's a fundamental difference between the two. Cryptocurrencies are cryptocurrencies because they're not crypto money. As an example, they convey purchasing power through a mathematical formula, but they're not money.
Simplify the definition of what is money and what is currency. What are the differences between the two?
Okay. Money is more of a mental concept. And when you talk about money, you have to talk about purchasing power. And that clearly is a mental concept. What does purchasing power consist of? It's not something you can hold or put in your hand. It's an ideal that we have in our minds. So if we create something that we think is of value, we think we're creating purchasing power so that we can actually sell that in order to obtain money or use that as a form of spending. But if you're, for example, a shirt manufacturer, you're not going to go around spending shirts. You need some intermediate good or service to act as the means by which you can work with a buyer of your product. And that is money. Historically, the best form of money has proven to be gold. Silver has also been important, less so though in modern times because of the industrial uses of silver. So today I see silver as a money substitute, and gold is really the remaining true money. So that's how I would view money. Currency, on the other hand, can be anything. There are examples of in prisons, prisoners using cigarettes as a form of currency. They're moving purchasing power around. The value of that cigarette is being used as a form of currency. So currency is the thing we move from hand to hand. Money is the thing that we use mentally. And it's a lot like speech. But with speech, we're communicating words. With money, you're communicating your concept of value. What your preferences are for different things as you fulfill your needs and wants as you go through life. Do you prefer holding this or do you prefer holding that? And how do you use money in order to achieve the different alternatives? And there's another element to it as well. It's when you're saving. You don't really save currency because currency doesn't really preserve purchasing power for you. Plus, you pay taxes on any interest income you earn. Whereas if you save gold, you are preserving your purchasing power. And you don't pay taxes on it until you sell it, at least in some countries, which is another big difference between gold and currencies. In a short as way as possible, I guess that's the way I would distinguish between the two. But you have to keep in mind that they are fundamentally different. And when you're thinking about money and currency, remember, currency is just the thing you're spending. Money is the thing that you're doing economic calculation with.
Right. Great explanation. I would love to see a gold standard come back as well.
We are on the gold standard. It's just that it's not a fixed one with paper currency being used as a means of maintaining value of that paper currency. Gold is always the standard. It's been that way for 5,000 years. When you measure things in terms of gold, like I did with crude oil or in suits, you'll see that that's the standard. It transmits purchasing power, the value of things over space and over time. And it's done that for thousands of years and will continue to do that. So when you talk about a gold standard, you're talking about having some money substitutes circulating in place of gold itself.
So let's talk about world reserve currency, the status then. Just keeping it simple. The US dollar, it sure to me seems like it's kind of the last leg of its hegemony. And that last leg could be 20 years perhaps. But where does the world, the US isn't going to give up that status and just adopt, whatever the next world reserve currency is, or if it's like an actual traditional gold standard, I guess I'll call it. Do you actually see us going back to a gold standard like we had 1913 or even up until 1971? Do you see that as potentially happening? Yeah. How do you see it playing out with the US dollar? Let's start there.
Okay. Well, I don't see the US going back to a gold standard because I see the outcome as a collapse of the dollar eventually. In fact, the book I wrote in 2004 was my friend John Rubino. It was called The Coming Collapse of the Dollar. Gold was $300 an ounce back then. Now it's 10 times that level. It's done a pretty good job in terms of collapsing relative to the steady and stable purchasing power of gold. If the fiat currency collapses, I don't see governments being trusted in the monetary sphere anymore. And so I don't see us going back to any kind of gold standard like the Bank of England had created and operated under the central banking model for the past 300 or so years. What we will go to is a little bit more problematic in trying to figure it out. I always have been thinking that, the patents that I did in the 1990s, where you enable gold to circulate as currency, the gold stays in a vault. And instead of moving it by coins from person to person, hand to hand, it stays in the vault and you move it electronically, digitally, from the payer to the payee. So if you have gold sitting in a vault in London, and you have to pay some supplier in Hong Kong, you click a weight of gold from your holding to the payee's holding, but the gold stays there. So you don't have to create a coin. You don't. There's no risk of loss of the coin being lost. There's no attrition of the coin as it gets rubbed and used over time, hand to hand. Ideally, I'd like to see go back to that kind of environment where we just use gold as a form of currency, and it's done completely by private enterprise with no role whatsoever for government. There's no need to have government involved in the monetary process. They only became involved back in ancient times because the rudimentary processes to refine gold were very difficult. So the emperor or the king put his face on the coin in order to attest to the weight of the metal in the coin. But as we've seen, a lot of those coins were debased by adding copper or other base metals and reducing the purchasing power. It happened in Roman times. It happened in British history. It's happening in American history, but slightly different in the sense that we're just debasing a fiat currency, not actually debasing anything related to gold coins circulating in commerce. But I guess the real answer to your question with regard to the United States is, are we going to go back to a rules-based order as provided in the Constitution, or are we going to continue through some kind of a fascist mode, government bank partnership to try to continue to create fiat currency and purchasing power out of thin air? If you read the Constitution, this is the American Constitution, there are two monetary provisions in there. First of all, to understand the context of it, after the War of Independence, which ended in 1783 with the Treaty of Paris, the 17 colonies became independent sovereign states. They had the same sovereign powers that the British Empire had, but they recognized that the confederation that they had formed to fight as a unified force against the British had limitations. The currency of the time, the Continental, which was the country's first currency, collapsed in hyperinflation. And the economic situation in the country, even though it was basically agriculture, was still in dire straits because of the war and because of the collapse of the Continental.
How long did the Continental last for before it collapsed, hyperinflation?
1776 or 7 until 1781. So five years approximately.
Yeah.
So the framers of the Constitution realized that they had issues to deal with. They had the economic issues to deal with. The British Empire was still in Canada and the Caribbean, so it was seen as an ongoing threat to the independence of the 13 new sovereign states. And they recognized that there were problems with regard to the currency because of the collapse of the Continental. So they put the monetary provisions in the Constitution that, first of all, they delegated 17 of their 7 powers to the federal government. They also accepted to not use certain powers at the state level, instead giving them to the federal government to use on their behalf. Of those 17 powers, some relate to interstate commerce, some relate to other issues like defense and things of that nature. But they also relate to the monetary provisions. Article 1, Section 10, delegates to Congress the authority to coin money, quote unquote, and regulate the value thereof. Now, coin money is the only power given to them. There's no power to print currency. And if they don't have a power, they can't give that power to someone else because they don't have it to give. So they have to coin money and to regulate the value thereof. All that means is that because the country was a bimetallic system, where both gold and silver were circulating relative to each other, in order to ensure that there was always sufficient metal, both types of metal in the country for coining, Congress would have to adjust the gold-silver ratio based on market rates. It started out at 15.4 ounces of silver to 1 ounce of gold with the Mint Act of 1792, and then in 1834, they changed it to the more famous 16 to 1 ounces of gold to ounces of silver. So, Congress, when it was formed, clearly understood what its monetary authority was. And at that time, there were private mints operating in competition with the U.S. Mint. The power granted by the states to the federal government is not an exclusive power. The framers very much believed in Jean-Baptiste Say, the French economist, who said that, free markets and competition are basically a good thing. And that was put into practice for many, many years back in the early part of the country. The other element of the Constitution that's important is that the states have specifically stated that they will not coin money or emit bills of credit. Now, what people don't understand is that the dollar bills in their pocket are, by their full name, dollar bills of credit. So the monetary system we are using today in the States is of questionable authority. So to get back to your question about the future, are we going to go back to a rules-based order and follow the supreme law of the land? Or are we going to continue down this system where people are no longer in control of their government? And this is a key theme of my book, Money and Liberty. In order to have liberty, in order to have control of your government, the government has to use gold because you don't want the government to have the ability to create purchasing power out of thin air. Because when they do, they use that purchasing power to their own means and not necessarily beneficial to the individuals themselves. Individuals lose control of government when the system is a fiat currency system. That's why the framers put the monetary provisions in there. They lived through the problems of the Continental. They understood firsthand what's necessary. And it's sad that we've jettisoned the wisdom of the framers and are now in this questionable, unconstitutional monetary system. But all of this is coming together, Aaron. The end of central banking, 300 years of central banking, the new social contract, the technology is changing things. It's a wonderful time to be alive, as long as you understand what's going on. And what I've been trying to do through my writings and my books is share, the experiences and knowledge that I've developed over 6 decades of my business career. I've lived in 7 countries, traveled over 50, been in banking, investment management, commodity trading, which I still continue to do. I'm happy to share that knowledge. I think that's why I was put here on earth, and the unique circumstances that I grew up in and had the great opportunity to work as I pursued my business career.
Man, that's amazing. You've done a beautiful job of educating people and obviously been very successful. So, thank you. I want to chat about Trump because I think it all kind of ties in to what you were just talking about. So there's things I like about Trump. There's things I don't like about Trump. And I'm not saying that just to play both sides. I mean it. So I like some of his domestic economic policies. I'm not an American. But one thing that bugs me about Trump is, particularly this term, is he's pushing these tariffs, and tariffs are fine to a degree and in certain circumstances, but he explains them to the American people like, let's take Canada, for example. Canada's been taking advantage of us and this and that. We're getting a bad end of the deal. We subsidize them by $200 billion a year, but the U.S. has the world's reserve currency, which affords it tremendous advantage. It's been able to manipulate other countries' economies, the global economy for that matter, because they have the world's reserve currencies. With that status, they've abused that power. They've taken advantage of that power, and many other nations as well. And a lot of these nations that trade with America are at its mercy because it holds the world's reserve currency. So what I'm getting at is, I look at Trump doing all these tariffs, whether it's 25 or 50% to Canada or 200% on champagne from France or whatever, 100% on the BRICS because they're subverting trade in US dollars or whatever it is. To me, I hear that and I just smell weakness. I just smell fear almost from the American power players who control the reserve status. It just seems like a desperate move. I don't know. What do you think about all that? Am I onto something with that?
Yeah, I think you are onto something. And, I did bring Trump into the equation about all these things that are happening at the moment where, the social contract issues and all of those types of things. But it's very much a key element of it. Is he going to change things around and go back to what America is supposed to be? I did an article a while ago called How to Make America Great Again, and it basically relates to what the Constitution requires and how we have to get back into a constitutional system of government so that people are in control of the government rather than government controlling people, which is what we have at the moment. So, I don't know how it's going to play out. We can't predict the future. We just have to take those steps to protect ourselves and our family and do what we can do that we believe enables us to sleep well at night. And that's been, my basic philosophy. As for the tariffs, we have to ask ourselves, what's the difference between a tariff and a sanction? Essentially, they're the same thing. They're a tax and an impediment to economic activity. It prevents people from doing what they want to do. There's a professor here at the London School of Economics who said that capitalism is what people do when you leave them alone. It's what people do to organize and structure. Hayek was basically the same thing. He called it spontaneity. The activity that, people get into to improve their situation. And as long as they're improving their situation in a way that is in accordance with natural law, leave people alone. And, governments are there to make sure that if someone violates natural law, government gets involved to punish that individual who breaks, natural law. But all this administrative state that we've got into is definitely going the wrong way. You look at the Wild West as an example. Back then, the sheriff of the town had a gun called the peacemaker. And basically what the role of the sheriff was, he was a peacemaker. And then in the 20th century, as we started moving away from some of these basic principles of the Enlightenment age, of the British Enlightenment from the 17th and 18th century, what's emblazoned on a police car now, it's law enforcement rather than keeping the peace. So we've moved away from basic principles that enable people to be free, to pursue liberty, and to live their lives as they want to. We become an administrative state, and that's impeding, in my mind, economic growth and the ability to improve our standards of living as a society as a whole. Again, from a big picture point of view, I think the experiment with social democracy has essentially failed. Margaret Thatcher put it nicely many years ago. She said that you eventually run out of other people's money. And that's what governments are finding to be the case. You can only, pluck that golden goose so far until the golden goose either revolts or dies. And that is likely to be the outcome with this present system that we're on. So we have to get off this road, go back to the principles of the framers of the Constitution, the principles of the British Enlightenment, from 300 years ago, the brilliant writers and thinkers at that time, and go the right way. Now, can Trump bring that about? That's a tall order in 4 years.
Yeah.
It's going to take generations, I think, for that to come about.
Yeah.
But he can make the right steps initially by going back to what the Constitution requires. One other point about strength or weakness. If you look at history, when walls are built, whether it's the Great Wall of China, Hadrian's Wall, or the Berlin Wall, there are signs of weakness of an empire. And when those walls came down, that's when the empire ended. The wall on the southern border, there may be practical reasons for doing it. I'd rather see the changes coming within the legal system and following the law with regard to illegal or legal immigration than spending the money to put up a wall. And I do favor putting the military power of some of these cartels operating from Mexico. I do favor the U.S. military operating in certain bases along the border in order to bring some peace and quiet and lawfulness to that particular area. I mean, there's so many cross currents today that we can look at and think about and try to ponder how it's going to play out. But it all comes down to living within a rule-based order. And the Constitution, as far as American issues are concerned, in my mind, has to be followed in all respects. And this is a Constitution as was originally intended by the framers. The first change was an amendment that eroded and fundamentally got rid of an important check and balance in the Constitution. The Constitution is full of checks and balances. And the check and balance in this case is that senators were not supposed to be elected by popular vote. They're supposed to be nominated by the different state legislators so that in Congress, the senators were protecting the interests of the state as a whole. The second amendment that occurred in 1913 was the income tax, which the framers understood the unfairness of an income tax. And that's why they prevented direct taxes from being part of the Constitution. It made it impossible to have a direct tax. It required an amendment to change it. And then the third thing, of course, in 1913 was the Federal Reserve Act. And that's pretty much set the stage for the 20th century and what we've had of the 21st century so far. But we realize that the problems that we have today, they come from those changes to the Constitution and not following the law and not understanding what the framers had created. And I hope that we haven't lost what the framers created forever. I think that the possibility exists, and maybe it's a good possibility, that common sense will prevail. We'll go back to learn how to live with our neighbors and live peacefully and harmoniously.
That's how it should be. It seems the Constitution in America oftentimes is just a guideline as opposed to the rules. And then whichever party, and this is coming from a Canadian, but I lived there for a couple of years, and I love America. I love what it stands for. But it seems whichever party's not in power references the Constitution all the time. Yeah. And then whatever party's in power doesn't reference the Constitution and does what they want. And, the framework seems to just be bent or changed or whatever. With enough current day political backing, they just seem to get things done however they want. So it's kind of, I don't know if I'd say I'd lost faith in Americans' politician desire to follow it.
The way I put it is that governments today are very dishonest. And that's another difference compared to, say, 200 or 300 years ago, when the Bank of England model was created. Governments back then were very honest, but that changed considerably in the 20th century. Governments realized that they didn't have to be honest. They could cheat the populace in order to gain more power for themselves. So, you have sociopaths. It's a fact of life. And sometimes sociopaths rise to important positions within governments, and those sociopaths can destroy things. Look at Hitler as the prime example.
I read a book. It's interesting you bring up sociopath because I read a book called The Sociopath Next Door, and it was written by a professor, I think, from UBC, university here in Canada. And the author was saying that 25% of the population has sociopathic tendencies. And they showed the vocations and the careers that sociopaths typically go into. And one of the most popular ones was politics. It's interesting. Before I let you go, there's another question. So you've been in the gold space for a long time. The last 20 years in gold has been phenomenal. 10% compounded annual growth rate for the last 20 years. Great market to be in. From 1980, early 80s, let's say, to 2000, gold essentially did nothing. You were obviously in the market then. Was there ever a moment when you started to lose confidence in gold or thought, maybe being in gold is a huge opportunity cost, I'm missing out on other things? Did your confidence ever shake in gold, or has it always been steadfast?
Yeah, it's never really been shaken. I guess it's a combination. I wouldn't say confidence in gold. I'd say it's self-confidence in my ability to look at something and reason whether I'm on the right side or the wrong side of thing. something, which is what you have to do when you're a commodity trader. When you're trading commodities, you have to recognize you're on the right side or the wrong side of the trade. And if you're on the wrong side, you have to get out. The difference, of course, is when you're looking at gold, you don't look day to day, week to week, or month to month. You look year to year or decade to decade to really evaluate, whether gold is undervalued, overvalued, or fairly valued, which is really what it comes down to. I have a number of mathematical models which are on my website, and I've tweeted them as well. They're also in the book, The Money Bubble, what to do before it pops. If you look at something objectively, and money is very mathematical. You know how much gold has been mined throughout history. You know how much fiat currency has been created. You just have to make the comparisons between one and the other to come up with the conclusion, is gold undervalued or overvalued? How much fiat currency is conveying purchasing power out there compared to the amount of gold that's conveying purchasing power out there? My models have been very, very consistent. The gold was overvalued in 1974 and 1980. And since 1980, it's been undervalued. Even at 3,000, it's undervalued. My model basically says, something around 10,000, based on the existing amount of fiat currency that exists, would be a much fairer representation of it. But the key, though, Aaron, is that we have to stop thinking in terms of fiat currency. We have to start thinking in terms of grams or ounces. It's not that gold has risen 9.2% compounded annually since 1971. It's that fiat currencies, the U.S. dollar, has declined by that much per annum since 1971 in terms of its purchasing power. And it's even worse where I live here in London, that the value of the pound has been inflated or debased even more than the dollar. So, that's the way to sort of look at it. Start measuring goods and services, prices of things, is how much gold or how much silver it takes to buy. We should talk about the relative value of gold and silver, because I think this is particularly important and provides a unique opportunity as well. There are two cross currents. You have the technological innovation, digital gold currency. You don't really need to use silver as a form of currency. Nobody's going to really want to use coins anymore. Here in London, they got rid of checkbooks a number of years ago. And now you just use your debit card, as you do in Canada, and just pay for things directly out of your bank account. That's actually a bad thing, because I like the privacy that cash offers. But aside from that point, the technology is changing things. And it's a question of how gold and silver are going to move forward. Now, I was mentioning before about the historical ratio of 16 to 1, which was set in 1834 and basically existed until 1965, when the U.S. stopped minting silver coinage.
16 to 1 being?
16 ounces of silver equal to 1 ounce of gold.
Yeah.
And right now you have basically 89 ounces of silver to 1 ounce of gold, which is outrageous. First of all, gold, as I said, is way undervalued. I think something around 10,000 is a fair value, 10,000 per ounce. So if gold is undervalued, and here we are at above 80 to 1, silver to gold, silver is even more undervalued. Now, if you stop to recognize that we don't need silver for coinage, but silver can do the same thing for you that gold does in terms of taking purchasing power outside of the banking system and having it in a tangible monetary system, then you might want to have some of your precious metals portfolio in silver as well as gold, because I think silver is going to outperform as we go forward from here. I have been saying this for a while, so I've been wrong for a while.
Yeah, I've been hearing this for a while too. And, I remember 2011, I remember when silver, went to essentially $50, but it's been essentially dead for a decade plus, right? And it's not really holding its purchasing power in the same way gold has, that's for sure.
Yeah.
I had David Morgan on a few days ago, and he kind of summed it up, and I don't want to wrongly phrase him, but he kind of summed it up as people have ignored silver. It's kind of deemed more of an industrial metal now than it is a precious metal. Right or wrong, he's not agreeing with that. He's a big bull on silver as well. But he just kind of chalked it up to sentiment, essentially, how investors view it at this moment in time, right? And he thinks it's wrong, but, what do you think's going to change that for silver? He says, when gold goes to $4,000 or $5,000 an ounce, then people will look at gold and say it's expensive. Oh, I should go get some silver instead. Yeah. Is that what's going to do it? Is it that simple, basically? Or
nothing is ever simple, but I think I basically agree with David's thinking. From a big picture point of view, what commodity is still below its 1980 high other than silver? Very, very few. So just on that basis alone, you have to recognize that silver is very undervalued. The second point is that silver is even more misunderstood than gold. I was explaining how gold is misunderstood in the 20th century. In recent decades, silver has become even more misunderstood. But if you view silver as a money substitute, as a gold substitute, then you can recognize there's a way of valuing silver and seeing some usefulness beyond its industrial component. And that's basically, as I was saying, if you own silver, you have purchasing power outside of the banking system. And because silver is undervalued to gold, which itself is undervalued, silver represents a better opportunity. Now, never bet the ranch, thing. Having 25% of your metals portfolio in silver, in my mind, makes sense given the undervaluation of silver. And if you understand the concept that silver is a money substitute, a gold substitute. So regardless what happens for the industrial demand for silver, as people recognize this concept that silver is cheap and, hey, it's an alternative to gold, I think you're going to see much, much higher prices in silver. Remember, I've been saying since 2011, when the last time silver got up to $50 an ounce, the bull market in silver doesn't start until it goes over 50. And if that's starting at that level, just imagine how high it could go. It went from $1.70 to $50 back in the 1970s. I hesitate to even think about how high it could go this time around, particularly if people start to understand that silver is a very viable, undervalued money substitute for gold itself.
Well, it's interesting. I believe it was the Spanish silver dollar that was longest running world reserve currency ever, I believe. But I'm quite sure that was the case. I've always been on the silver. I've always understood and believed in it, and I own it. The storage is a bit of an issue in comparison to gold. I think that's kind of one of the issues. But I am a believer in silver. It's been pretty stagnant for a while now. But I guess that was the same case with gold, 80s to 2000, right?
It's being
pretty stagnant.
Silver's being accumulated, and it is moving up. I mean, we're back into we touched 34.50 today. It's moving up, and it's not weakening relative to gold anymore. It's sort of stuck at this 85 to 90 area. So as gold goes up, silver goes up with it on its coattails. But eventually, silver is going to overtake gold, and you're going to see that gold-silver ratio fall back to at least 30, which is where it was in 2011. I've been saying that when gold got to 3,000, which I mathematically felt was going to happen, that the ratio at 30 would mean $100 silver. Gold's at 3,000, but silver has disappointed in that sense that it hasn't kept up. But the value is there. And, when it comes to markets, sometimes you just have to be patient. So I think that's the key to understanding silver here at the moment. And just keep in mind, I don't really want to get into this because that's a whole new subject. If gold and silver are undervalued, the miners are way undervalued as well.
Oh, yeah.
But keep in mind, gold and silver are money. Miners are an investment. Entirely fundamentally different. When you get involved with stocks and shares, you have to do an analysis of the miners just like you would anybody else. What's the management? What's the property? What's the balance sheet? What's the prospects look like? What's the political risk and all those types of things? Entirely different analysis when you're analyzing money, which of course is gold and silver.
Absolutely. Well, James, it's been a fantastic, dynamic conversation. I've learned a lot as I expected to. Thank you so much for joining me today. Where can our followers and subscribers, where can they find you online?
Yeah, I'm on X at FGMR. That stands for Free Gold Money Report. And you can also find my writings on my website at freegoldmoneyreport.com.
Perfect. And we'll include links in the description for all of James's socials and site. James, thanks again for your time. I really, really enjoyed this conversation today.
Thank you very much. It's been great talking to you. You asked some really great questions. You made me think. So,
thank you.
Hopefully your viewers will benefit from this conversation that we've had.
I'm sure they will. I certainly did. So thanks, James.
You're quite welcome. Thank you.